I will focus first on Tesla. I opened covered calls and I opened it on Monday, and I opened the covered calls with the strike price of $365, so somewhere here. If you remember the planning session, then I was saying it would be actually a level I would be comfortable with selling. What has happened is on Monday there was this news, which was old news actually, but it was coming as a news that robotaxi started in Austin and it's live now, and the price actually started to grow and to go up. It was really significant move up, right? 8% one day, and I started to feel that maybe it might be the situation where the price will go ballistic and we will see a rapid growth of the stock. It wasn't actually true. It was only the day after. And what I did, I still waited on Monday what will happen, but then on Tuesday you can see actually that on Tuesday it opened 356. So I was at risk that the price will really explode and I will be left out without opportunity to participate in this growth. And so I actually bought back the covered calls. It cost me some premium. Actually, I had to pay extra. So then this covered call was in red numbers and we can see it in trades how it looked like, right? So I sold actually on Monday when the market opened, sold covered call for $1.25 per share, so for a whole contract for $125. But then as the price exploded, I bought the covered calls back and it was for $336, right? So you can see that over $300 loss. And then because the assessment of what is happening was not correct and I was convinced that the share price will be growing, I not only close the covered calls at loss, but I also opened the position somewhere here with more shares, and I was hoping actually that I can participate in the growth with additional positions. However, obviously it's not what has happened. The price was going down and I used stop loss and I managed risk in this trade quite nicely, and I closed the trade somewhere at 340. So I think it was like $5 per one share loss. This wasn't a very nice trade. I lost 300 on the covered calls and then I lost additional 550 or something like this, or almost 600 on this trade. So the week didn't start very well. I was evaluating what to do next with Tesla, and the stock is in the situation when we have new products in the pipeline. There is a roadmap for new products. The new products are being launched, and so there is hope that it will generate cash and revenue, but it's not actually happening as of now. And so therefore the market is reacting strongly to any news, right? So positive news like launch of robotaxi can drive the price up 8%, but then it's sort of short-term thing, short-lived thing, and the price declines quickly because it is not supported by any numbers. I believe that we will be now moving sideways within this range, probably 370 as a top and then 290 as a bottom, maybe even less. It's possible that we might be going back to 220 levels in the very, very, very long run, right? So if I zoom out and I can do week range, this is the channel where Tesla is moving or has been moving in the past years. We can expect that once we have all those new products, Robotaxi and Optimus, in production and it will start to generate money, it will actually go ballistic and it will grow from the channel and it will break through. But as of now, we will see what is happening for these situations normally, right? When the company is innovative, creating new market, creating new opportunities, but it's still not materialized in earnings and revenue. And so we probably see sideways move and the stock will be reacting quite widely to any news.